Good morning, guys. Good morning, everybody. How's everybody doing? Let me know if you guys seeing the screen okay. If you're seeing me okay. I sound like a frog because I have a cold, so I definitely know that. Just let me know in chat if everything is good and if we're ready to go. I'm seeing myself on the screen. Again, sorry, I will sound like a frog for the whole time. Good morning, everybody. Good morning, Miguel. Hi, everybody. Hi, Luis. How's everybody doing? Let me know where you guys are from. I want to hear you. How's the screen? Everything is good? For some reason you guys. Oh, hang on a second. We're not see. I know why. Okay, hang on. I know you're not seeing my screen. Okay, share screen. I want to do entire screen. This screen share. Okay, now we should be ready to go. Looks like we're ready to go, right? Yeah, let me see. It's coming up. There we go. Screen is there. There we go. Okay, screen is up. So I have a really, really good show today. But we're going to wait. I really want to wait like 10, 15 minutes before I tell you the full, maybe 10 minutes before I tell you the full strategy, because it's a really good strategy. This is the indicator that I coded over the weekend that really helps everybody in my room to just kill it in terms of finding the right trades. But I want to take a little time here because I want everybody in the room. I don't want to be repeating this 1,000 times. Hi guys. Hi Andrew. Hi Johnny. Nice to see you. España. Where are you from in Spain, Johnny? Are you from the coast, or are you coming from Madrid to us, or Barcelona? Alana's coming from Michigan. Nice. South Africa. Really great. Okay, good to see you guys. So this is really, really cool. If you're at all interested in scalping or day trading, if you're at all interested in passing the Apex challenge, which is going to be right here. Hang on a second. Let me just do one thing, guys. While everybody's coming into the room, let me do this. Hang tight just one sec. I want to try something. I wonder if I can go back into my yeah, bear with me. I want to try to go into my just one sec. Sorry. Okay. No, hang on. All right, I can't do. Oh, maybe I'll do it this way. Hang on. Let me just try one more thing here. Bear with me. I'm just trying to get into the comments through YouTube, which makes it a little bit easier for me to post the comments for you guys. Let me see what happens. I want to say, okay, so that's good. Okay, yeah, I can do it. Okay, very, very cool. Do I have favorite minis like on the screen? These are not minis. These are micro. Yeah, minis. Sorry, these are minis. You're right. So we're trading. Just to let you guys know, I'm trading the $50,000 Apex account. Right, it's like 51,000 something right now. Like I'm trading actually quite a few of them. So you can see there's one account, two accounts, three accounts, and they're all above 51,000. We need to get them to 53,000 to get funded. As part of my strategies, I very much like trading multiple accounts because a couple of reasons. As I talk to you, and this is by the way, the great reason why you want to go with Apex, because Apex is just literally giving them away for less than the price of a New York City diner breakfast. So I'm going to put the link in there. Be sure to sign up. So I think $50,000 is like $30. I don't even know. I think it's ridiculously cheap now because of the discount. So the reason why I like multiple accounts is because, first of all, you distribute your risk. You have like a couple of bad trades, you can go to a new account. You don't blow up the account because you keep constantly banging the account because you're angry or you're losing emotion. The other way is because you can also do different strategies on different accounts. You can kind of distribute your strategy ideas. Some accounts I kind of like to play around with. Other accounts I'll just try to strictly trade my own strategy. Other accounts maybe you want to do a little bit something longer term. So it really makes it easy to flip around. I think anywhere between 3 to 5 accounts at the same time is a really good way of trying to get one or two of them funded, right? So it's a sort of just like a portfolio approach. You got to bet. The best way to invest is to bet into the index, right? Because when you bet broad, you generally tend to win. So it's sort of the same idea. If you concentrate on just one account only, you could do well, but you could also, you'll just blow it most of the time, which is really the probability. But if you kind of distribute your trades and distribute your approaches, you get to keep most of these accounts. You get to have a much better mental attitude towards them. And as you can see, I'm actually taking all three of them towards the 53 target. So, we'll see how that goes. Yes. So what does funded mean? So we're trading Apex Futures prop firm account, which you buy an evaluation account. So that's a kind of a virtual account. And if you pass the test in prop trading, they will fund it with real money, and they will pay out real profits once you start making profits on the real account. So we've had many, it's obviously a lot harder than it sounds. I think the failure rate is 95% because, of course, it's very hard to succeed in, like anything else in life. It's very hard to succeed in passing these things. But we specialize in basically creating strategies that help traders pass these. And in my own room, if you're interested in my coaching product, which I'm going to put up here, I just, we do coaching every single day, live trading. And then every Tuesday night, like tonight, I'm going to be doing coaching, for everybody every single week. So within my coaching universe, the people who are taking coaching with me, literally everybody has not just passed these accounts, but a couple of guys have gotten funded up to $3 million worth of accounts, and are trading very, very well. My greatest joy is that most people who trade with me trade much better than I do, because I don't have time, I don't have the personality, I don't have the proper discipline. But all of you guys do. What I do have is a pretty good knowledge of the markets, and that helps you clarify exactly when to trade and what to trade. And that's really what I hope to help people with. So that's really what prop trading is all about. And that's what we do all day long here. And I help people, we help people pass these tests, and more importantly, get funded. And as I said, don't hold me to this, because I really don't know, because I never really polled everybody, but I'm actually pretty confident that we're above 10 million and funded for all the people who are trading with me now. I know for a fact that one of my traders has 3 million funded already in his accounts, which he's a monster. He's done really well. And I think probably a couple of traders who already have $1 million or $2 million funded. So you can see that it's very, very attractive. But don't just focus on the money. Focus on the fact that this is literally the single best way to learn how to trade, because it's your risk is fixed. You don't have to put your own money into the market. You trade the exact same prices in the exact same situations that you would with real money. But it's like trading on a simulator. Like, you basically learn how to fly a 747, just like pilots do on a full simulator. So, having explained to you a little bit of prop, let's talk about what I've done with my scalping product, and how I've made it into an indicator. And by the way, this indicator is totally free to anybody who joins us. I'm going to give you a link here, a discount link. So if you guys want to join us and have access to this indicator, it will make your life a lot easier, trust me, in terms of being able to trade this. What we do is the following. Do nothing more complicated than what I call a 2-bar trade. We're looking essentially for the following conditions. When price, here's a good example. Like, let me find. Okay, this is the 8-period SMA. This is the S&P 500 8-period SMA. We're looking for the following pattern: red bar, 2 green bars above the moving average. That's a buy. Green bar, 2 red bars below the moving average. That's a sell. It's just it's the most basic element of trend: buys and sells. 2 consecutive ups create the smallest element of trend. 2 consecutive downs create the smallest element of trend. We use the 8-period SMA as kind of demarcation line for us. And that's just, the first element. So what I did that I think is really interesting, and where it's really, really helps people, is I've created this indicator that helps people time the entry so much better. And I think probably I could best explain this. Well, let's best explain this on the Nasdaq, for example. So I'm going to show you the long setup. And by the way, the long setup in equities that is going long, trading from the long side, in my opinion, is twice as good as the short setup. Equities are a long, primarily product. So yes, you can make money, selling using my indicator, but you will also find a lot more false positives, a lot more false signals on the short side than you will on the long side. And let me explain to you the strategy and the methodology behind what I did. And I think you guys will find it really interesting. Many of you probably have heard of this expression that stocks go up on a staircase, right? This is a staircase, and they come down on the elevator, right? Let me know if you guys have heard that expression. Give me a yes or a no in the comments. I'd love to hear it. Okay, have you heard that expression? Let me know. Yes, no. Where are you guys? I'm looking at you on all my screens here. I want to make sure you understand. Okay, so Bob has heard this. Umesh has heard this. You guys have all heard this, right? So it's a very, very true expression. You know, a lot of like platitudes are there because they're true, right? Because they're common sense observations of how things really, really work. So let's take a look at the long side only, right? With the staircase side, right? Okay, let me just get rid of all of this. Sorry. Remove drawings. Okay, so let's take a look at the staircase side. So what I've done is these two values give us like a reading of where the trend is. The value up top is the measurement of slope. How steep is the rise over the last 8 periods, right? So if you look at the indicator it basically follows the period moving average. You know, slope is you can set it to whatever you want, but I set it to 8, which is the default for the moving average. And what you see here is, you have a big burst in Nasdaq. Slope gets very steep at 17, right? The low of this candle is 53. That's the low of this candle. It's telling you the low of the candle, because in an uptrend you want higher lows, in a downtrend you want lower highs. That's the classic definition of ups and downs. So what I'm looking for as an uptrend entry signature is a decline in slope, but a higher low. So I'm looking for a pause. I'm looking for this particular pattern, except I've mathematically mapped it. I've given myself the mathematics to know exactly when this pattern happens. What I'm looking for is this, because the next thing I expect is this. The staircase goes up, right? Pretty simple, pretty clear, hopefully understanding. This is just simply the math behind it. So you have a 17, and now you have a much lower slope at 5, right? And you have a higher low, 63 against 53. Perfect entry. I'm long here at 71. Stop is 10. Target is 5. I'm done. Boom, boom, boom. Thank you, ma'am. Wham, bam. We're done. That is the classic long entry structure. And what that does is it prevents you from taking too many trades. It keeps you from basically doing a trade every 5 minutes to maybe doing a trade every 20, 30 minutes. And you only have you can do just 2 or 3 good trades a day, and boom, you're done. Because every single trade, even if you just did one contract on Nasdaq, that's $100 per trade. You hit 3 winners, that's $300. If you did this on the S&P, maybe you wanted to do 5 contracts, that's $250 per trade. That's $750 in just 3 winning trades. So that is the long side, okay? The short side is the elevator move. The elevator move means you want accelerating slope, right? And lower highs. So in this particular case, you have a slope of 8 and the high is 81, right? No, sorry, I take it back. You have a slope of 3. You have a slope of 3 over here, and the high is of 80. And then you have a slope of 8, which is a decelerating slope. It means it increases to the downside, but the high is a little bit too high. So this is a trade I probably would have passed on because it doesn't qualify both of the conditions. You want both of the conditions to be true. So you have to stay patient. Now the slope declines, but now it accelerates. Now you go from -5 to -7, acceleration of slope and a lower high. So you get short here at 56. There's no heat whatsoever, meaning there's no retrace. You just boom, you sell it hard right into the low, and that is the low of the trade. That's the setup on the short side. As I said, the short side can be a little bit tricky, and there are some nuances that I'm going to guide you through here that we'll go through. But generally, those are the primary principles of how we want to trade in terms of the setup here. And we have four instruments that we're looking at here. We're looking at Nasdaq. Sorry, I'm looking at two Nasdaqs. Why am I looking at two Nasdaqs? I'm going to go to S&P. We're looking at S&P. We're looking at Nasdaq. We're looking at gold. And we're looking at Dow. Right? Those are the four instruments that we have. And the one thing that I will say to you is that, you guys are used to me trading 1,000 times a day. This definitely dampens my frequency of trading, but it creates much better trades. So we will, we'll wait. We will wait for, for trade setups today. I'm not going to get crazy and just, trade every single pop that happens. But what I wanted to show you is that, now that you have the quantitative tools in front of you, the slope, the highs, the lows right away, because that's what the indicator is showing you. You could do other variations. If you're a momentum trader, you could say, I want to buy higher highs. I want to buy steeper slopes. You want to do all sorts of stuff that's kind of interesting. There's even like some interesting counter trend trades that I was playing around with, where if you get a negative slope, but it slows down, like not acceleration but deceleration, and it's actually a higher slope. So in other words, higher high. So kind of a rising market with a negative, with a slowing negative slope. That's actually a great buy. It's a great counter trend buy. I'll show it to you if it comes up on the charts. But those are kind of more advanced situations, which you don't necessarily need to do. All you need to do is simply follow these two rules. I want a declining slope value and a higher high on the long side. I want an accelerating slope value and a lower low on the sell side to find my entry points for trades. So like right now, here's the Dow. The Dow is minus 14, minus 13. By the way, if it's a push, if it's like minus 14 and it's a lower low, I'll probably trade it. And that's my minus 17. So we actually have a trade in the Dow. Let me see if I can sell it. Ask. See if I can get this move going over here. And we're done. And you saw, it was a super fast move because I saw it out of the corner of my eye over here. So this was, look why I did this. And this was obviously market open, 9:32, also kind of a crazy time to trade. But I had a minus 14. Let me get bigger here so you guys can really see it. We'll just do an anatomy of a trade. I had a minus 14 and a minus 17. I had a 68 against the 58. So everything gelled, right? The market popped against me. I sold in the ask and it very, very quickly completed a trade. Give me the 50-point trade. Now this is a market open is kind of crazy. You don't need to do this on the market open. You want to do it on a much sort of slower, easier thing. But the principles are all the same. It's basically boom, 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 and you have a setup, right? Like right now, I'm a little bit. Oh no, look at that! It disappeared. The other thing that's very, very important. This is really, really important. Is you absolutely have to wait until the candle closes, because sometimes the candle will give you a fake value, like it will say, "Oh, I'm a seller," but then at the very last second, they'll buy the candle, like they do a reverse right here, right? And they're buying a candle, and you get trapped into a false trade. So very, very important. We always wait for the candle to complete in order for us to trade the entry. So you guys saw the short example here from the move, and obviously the reason why I have it all, I have everything preset on my TradeAvate. I have my 10 target, 20 stop. I can sell at ask. This is very important. We used to trade from TradingView, but when you're trading these kind of setups, you absolutely have to trade from TradeAvate, which is a much faster, much better platform, really much more industrial size built platform for what you need. And oh God, my nose is dripping, so my apologies, guys. Sorry, it's Kleenex time. So everybody's gonna have to bear with me this week because the little one got me totally sick. Anyways, the point is that you have the TradingView for your analytics, TradeAvate for your execution, right? Let me know if that's clear to everybody, and you guys can see how well it's doing. So on a normal trade structure, I generally like to risk 100. Try to go for 100 with a risk 200. And if I can do 3 trades, that's plus 300 for a day. I have a good day. If you want to run a super aggressive account, and this is the beautiful thing about running a couple of accounts, what I generally like to do, and this all depends on what instrument you like. I really, really love the S&P. Almost nobody likes the S&P. They find it very hard to trade. I absolutely love it. It's all, a lot of it depends on your personality and style. I tend to just perform really well on a one point target. S&P for me is a 1 point target. I'm really good at focusing on that and getting it done. But for example, like a instrument like S&P, very, very liquid. I could do 5 contracts up down. That's a 250 target with a 500 stop, which it's a large stop, but I have $2,500. I have 5 times my stop as my budget. And if I'm doing this well, let's say I'm doing like 8 out of 10 trades, you'll get funded very quickly within 2 or 3 days on the account. If you just kind of want to ramp it up, I think it's just an interesting approach for somebody who wants to get a lot more aggressive on their positions. So we've sort of slowed down 5 minutes into the open. Not much on the news today. We have new home sales coming up a little bit later. But as you can see, one of the cool things that you will see here, is that when we're in chop, right? When we're in chop, and there's very little acceleration or deceleration, and in fact, what you're seeing is red, green, red, green, red, green, red, green, just flipping back and forth, flipping back and forth. The indicator doesn't give you any signals. You're just sitting here waiting and not committing to dumbass trades that basically, the thing that kills us, if you're trading trend, nothing kills you more than this pattern. The seesaw pattern, the up, down, every breakout is a fake out, every breakdown is a fake out, right? That is a pattern that absolutely destroys you, because trend, by its very definition, means continuity, right? Continuity means that you want to be trading some decline or somewhere upward things. So when we're looking at this particular setup, we need 2 things. We need, at very minimum, 2 red values or 2 green values, at very minimum. By that definition, you see how like we have the green red values flipping over back and forth. We're not committing to any trade, because we don't even have a marginal setup, and that's what I really like about this particular setup, because it just keeps you on the sidelines. Now, yes, we risk 200 to get 100. The reason why we do this is because obviously I'm trading scalp. I'm trading very, very short-term, 1 minute time frames. It's not at all unreasonable to sometimes do 10. Sometimes, if you're really focused, 20 trades, in a day. So when you're doing that, you can afford to go negative risk reward, because you're looking for a 70 or 75% better hit rate, right? As far as the hit rate goes. Like, for example, I think let me see what my hit rate. This might be problematic, because I screwed up my account. What is this? This is today's. Let's do this week. Okay, not great, by the way. Look at this. What is it? Is this week? This account I butchered a little bit. Yeah, let me show you a different account. So this one I did not do well on. I mean, it's not like I did poorly, but this is a good advantage of doing a good poor account. Let me just show you the reports on this one. I haven't done anything in this account, so this would be like last week, I think. Yeah. So this is a good example. So this account I traded pretty well last week, and it's a 72.25, which is, I really want to be at 75.25, meaning I win 3 out of 4 trades. That's kind of like, the sweet spot of my performance of where I want to be. So we're going to go back to the 10 account, see if we can run that up a little bit today, do a better job on it than we did before. So what's going on right now in our markets? We're possibly starting a trend cycle. So far, just nothing. We're just chopping around here. This is the first green value. We'll have to have a second green value in order for us to even establish a modicum of a trend. Even gold is kind of just putzing around, doing nothing, right? Not showing anything. Nasdaq is struggling with its 20,000 level continuously. It's a sort of a typical Tuesday, where we're trying to find our footwork. And a lot of times, the footwork will be found sometimes after we trade, like 10:15, 10:30. One of the things that I'm always frustrated about is that, and I wish I had time to do this with you, is that the 10 to 11:30 hour is a really, really good hour to trade. And generally, this is when the really big trends come. But doing it this way, you guys can actually get the education, and then you can put it to use when you start doing it. Um, um, yeah. How often do I offer one? We trade every single day, Jan, in our room, and then we trade publicly Tuesdays and Wednesdays. This week we're actually going to trade Thursday as well, because Thursday is U.S. GDP data, big event. So if we have a big event on the calendar, I like to trade that live, and this happens to be Thursday, so we'll trade that live as well. So I think it's going to be super interesting to trade live with a new indicator, because I think it's going to give us that perfect stair step entry on the long sides using the indicator. So I'm just watching very, very quiet price action. Nothing much really going on here. We found a little bit of support here on the Dow. Where's the whole market? Nothing. 8 basis points, 5 basis points. We're very, very flat, right? Very, very flat on everything. It's just kind of a quiet day, so we'll let the prices. And this typically happens. We will be quiet the first 20 minutes of the day as everybody sort of tries to feel out the market, and then somebody's going to decide, okay, we're gonna buy them, we're going to sell them, and we're going to see how how it rock and rolls. Markets, from a long-term point of view, I'm getting incredibly nervous about the market. But who cares what I think? But I've just seen so many markets in my lifetime where we've been in this situation. We are grossly overbought on valuation. We are at like 25% premium to forward PE to where we should be. Like PE is 21, we're going to be at 25 forward PE. Junk bond spreads, which is just a classic measure of overvaluation, are at their lowest. All of those things, like I remember 2000, I remember 2008, I remember all those periods created some massive declines. And it'll be interesting to see actually how we survive if we do get a massive, decline, how the deceleration acceleration algorithm will work through that. Yeah, so it'll be fun to see. All right, I'm going to put up an Apex banner. Also, for those of you guys who are not American, if you're Canadian, totally kosher. So if you're not American, I think it's the only exemption to the rule. Everybody else around the world. Let me see if I can put this. Yeah. You can get everything we do literally for free by opening up an account with our friends at ACAP, our favorite broker out of Australia. That you simply open an account with them, and you will have access to all of our signals, all of my indicators, everything that we do here in the room. So I'd love to have you join us. It's by far the easiest way to join us. If you already have an account, trading account, just move it over to ACAP, and you get to have all of our services for 6 months or a year. Just putting a deposit in that, because they're just great guys, and they're subsidizing it. All right, so we're breaking through the 2000 on NAS, right? First green. Remember this. We have we need 2 greens to have a trend, right? We're kind of crawling on the S&P as well. Let's see if we might set up for a trend slice into the markets, or this could just be another fake out to the downside. Clearly not a lot of motivation in the market. You see the price action is very slow, really not moving a lot, right? And not a lot of volume here, so we'll just have to be very patient with it. Just watching everything around. So how's everybody doing? Like, how's your trading doing? I'm actually curious. Let's do a little bit of polling. We haven't done a lot of stuff here, so let's just do some polling. You guys tell me. I have traded CFDs or futures before. I want to know how many just totally new people here. Actually, you know what? Let's change it around. I have never traded before. What I want to know is, I'm actually curious. Answer that question. I'm actually curious how many of you guys are absolute newbies. Because this is kind of fun for newbies to engage. This is like a really, really good product for newbies. And then I'm like really, really curious. We'll do a second poll in just a little bit about how active everybody is and what your favorite instruments are. What do you like to trade? Notice that I trade indices and gold, and I don't trade FX because on a 1 minute chart, FX is too slow for 1 minute chart. I do have, you see me, I'm trading FX algorithmically, but I can't trade FX on a FX. My partner Kathy trades FX on a 1 hour chart, and that is probably the right time frame for FX. But when we're trading live, we're trading short term signals, so FX just doesn't is not good enough. NQ, ES, and gold. Those are the best ones, right? Trying to make a transition from Forex to futures. Okay, yeah, it's great. Even making a transition from Forex to CFDs, which is just indices and gold, is also really good. I find those instruments to be the indice instruments to be really, really good. We see how quiet we are. We're just like, wow, 9:46, nothing really going on here. We're waiting for one thing. We have 10 o'clock news, new home sales. Maybe that has some potential. What do we have here? So we have the first green in the YM in the Dow. All right, so this is interesting. Okay, here we go. We may have a setup here. I have to be super patient here. We've got 41 seconds left here. What you see, and the indicator, by the way, will of course pop ahead. Like if the values are calculated within that 1 second, it will display those values in that 1 second. So let's get big so you guys can actually see this. So S&P, right? We have a green value, 608, 8 slope. It looks like it ain't gonna happen anyways. Because for a second there, it peaked out, showed us a positive, like a positive slope and a higher high. So I thought maybe we would have a potential for a trade, but it doesn't look like we're going to get a potential for a trade yet. 3, 2, 1. No, this we're kind of dying out at the moves. There's not a lot of trend going on here, but I thought we might have, and it's still early. Obviously, we'll have to see. We might have this pattern where stair step, and then I would have been able to get in here and trade it to the long side. All right, so no signal on the S&P. We're just kind of muddling around. Dow gives us the first signal. So just to sort of reaffirm, what would be a signal? If the Dow goes 4670 or better, that would be the loaded candle. And if the slope is 7 or less, right? So kind of a flattening slope, I'll get long Dow here for a possible trade. Because that would be a reasonable signal for me that there's some continuity happening. I'm watching the Dow and the S&P. Those are actually two of my favorites to trade. S&P obviously is a lot more liquid, but if you're trading Dow 1 or 2 contracts, it really doesn't matter. You're fine with those. Nasdaq is a lot of fun, but it's also unbelievably more volatile, right? Just so much more volatile than the other two. That you got to be prepared. You got to be prepared to lose in Nasdaq at any given time because it's just so. So here we go. Like Nasdaq, for example, 34 seconds. I'm just watching all the other ones here. I'd rather do the S&P. Although no, the S&P now is 15, 16 slopes. So I don't have a slope, and Nasdaq is also getting higher slope. So they're all getting higher slope, right? So that's not my setup. And the reason why it's not my setup is because it's a great momentum setup. Like if you want to buy highs, buy lows, it's a great momentum setup. But it's not a retrace setup. And what I'm trying to do is buy breakout, retrace, continuation. That's the sort of thing. So you see how this 21 slope, and now, if you bought that, that would have declined against you. Now you could have, it could still work, but I don't like to take that risk. And you can see that, mathematically, how it, very, very quickly retraces against you. So I prefer to come in at a level where I'm not going to get too much retrace. This still could work. I could, if I bought this at 20, oh no, it got stopped. It would have gotten stopped out on my 2 points. Yeah, I would, right away. And that's why I don't do, momentum trades on these things, because they tend to retrace quite quickly on the micro level. The cool thing is, look how mathematics really helps you. Look how you don't have to think about, what is the right? Does this look right? Does this not look right? This gives you a precise reading, so you know what to do, right? Or you know what not to do. You see, like how the value of this thing is not even that it picks out good entries for you. It keeps you away from bad entries, which is what I try. If you can stay away from bad entries, you're like 90% towards winning the game, right? So what instrument has the most movement? Nasdaq has the most volatile movement. S&P has the greatest amount of liquidity, meaning that you could trade 10 contracts of S&P no problem. Dow has the most point movement. So like if you want to trade the biggest amount of points, that would be Dow, but they're very, very small points. So, but if you trade large size, you could trade Dow. And gold is somewhere in between. Those are the ideas. All right, cool. Coolio. Yeah. So okay, here we are. Not quite. So here's another good example where I'd rather. You saw that, by the way. It was there. Here there was a potential signal here, but it wasn't. It was a 62 against a 69, and even if the signal was there, I wouldn't have taken it. So yes, I'm taking a lot less trades in my trading, but I'm hopefully taking better trades in my trading, right? Or at least I'm avoiding pretty obvious losers, right? In the trading, and that's really, really useful. I always think that sometimes the value of the indicators is not so much to help you find the winning trades, but is to help you avoid as many losing trades as possible. You think if you look at it that way, you don't you don't resent losing. You kind of appreciate the fact that it filters out for you. This is a scalping strategy, yes, because we're trading for 10 Dow 20 target, a 5 S&P 10 stop, 5 Nasdaq 10 stop, 1 S&P 2 stop, $1 gold 2 stop. So we're trading for pretty small locations, because that's just my own personality. Now I have, by the way, if you guys are interested, we actually have a really good, more swing oriented strategy, right? Just waiting for it to come up here, and you can see, like, this is a strategy that would have worked really, really well. You see that it shows you the purchase prices like right over here, and this is when we'll be trading with a 5 stop 5 target. So if you came in on this trade at 609, you easily would have made 611 here with a 5 stop, right? So that would have been a really, really good trade. See these 2 arrows? You would have been coming here at 608. Yeah, you would have barely survived this against 5. So your stop would have been 3. You survive this, and then boom, 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 it comes back up on the moves. So the swing indicator is a really good indicator. I just I've done well with it, but it's just not my personality, and I like to do relatively fast trades with you guys. So today is just one of those days where it's super, super quiet. Oh, you know what I missed? Well, here we have. Let me see if I can do this. Kind of gold. I missed the gold trade. I'm sorry, guys. I was talking. So the gold trade, just to show you, gold trade would have been a pretty decent short trade, because we're minus 19. This is clearly lower, 02.4, right, against 6.4. You would have been in here at around 102, and you targeting 2400 02 or something like that, something of that nature. But I gave up. I missed that trade, so we'll just let it go. The other thing is you're going to get plenty of trade opportunities, right? Sometimes an hour will go by where there isn't too much, but most of the time you're going to have 2 or 3 trade opportunities in an hour. It's not worth, if you miss the trade, not worth chasing it. Because the critical thing here is when you're scalping, the single most important thing to do is get a good price entry. A good price entry is more important than even the setup itself, because the good price entry will help a bad setup and will absolutely enhance a good setup. But if you're chasing the setup, it becomes very, very unproductive. So here's another mildly frustrating structure here. So slope is clearly low, right? 1, 2, but we have a much lower high. Now, would I take this trade? And just violate my rules? Why not? Because we haven't done shit today, so let's just give it a shot. And I'll buy bid. And let's see if it's going to work for me. Where am I? There I am, and I'm looking for 17. Will this work? I think it might. Yeah. And now, why did I take this trade? Versus just kind of violating my own rules. I took this trade for 2 reasons. And again, this is where the nuance comes in. And when you get advanced in this stuff, you start to really appreciate it. I took this trade for 2 reasons. Number one, we are essentially net up, right? The overall slope of the trend is up, right? So we have 1, 2. This is the 3rd green signal. It's not bad, right? We had effectively a flattening, a retrace of the move, right? And then a positive curling of this. Then the slope went positive again. It means that the buyers came in, right? And we just basically traded to the 8 SMA. This was a nice big power move to the 8 SMA. So I was like, yeah, they're probably going to lift this higher. This is probably going to be a pretty decent trade. And as long as, remember, I bought on the bid, so I had a really good entry. It didn't take me long to capitalize on this, right? So it wasn't a fully kosher trade because I had a lower high here, but it was good enough because it was a nice deceleration of the move and a possible continuation of the uptrend. That's really what you're trying to do. So you can see how much easier this becomes when you have this quantitative dashboard in front of you. Once you begin to learn to read the numbers and see where the numbers are at, you can really make pretty intelligent decisions on what to do. And I'll give you some pointers, and obviously let me just put one more time. I'm going to put the link in here. If you guys want to try all this out, I'm going to give you I'm going to give you the discount for a 1-month trial, so you guys can try this out for a month with us if you want. I'll give you what I think is the best advice with this indicator. Trade longs only, right? I love to trade shorts, and we all love to trade shorts, and the shorts structure is pretty good in it, but it's not as good as longs. If you're going to sort of try to trade this with the least amount of stupidity, which is always the number one element of bad trading that I'm always guilty of, equities are a naturally long only product. Gold has been a long-only product for the last 2 years, right? Gold is at 25. There may be days when it's just, complete sell-off, and you're not going to get, if it's a complete sell-off, you're not going to get the green signals. You're not going to get those green signals anyways, right? So there's no harm, no foul. But most of the time, even in a strong sell-off, you have counter-trend moves to the upside, and most of the days, something like 7 out of 10 days, equities are going to be rising. And if they're rising, there's no reason to kind of trade to the weak side. You want to trade to the long side. If you're trading trend, you just want to buy the dip in a trend and let that ride, ride. And this is, to me, the more I trade this, the more I realize I don't, if I find just 3 long only trades in the S&P or Nasdaq, I'm done. I'm done. You see me, you see how easy it was for me to pick up the longs here today. I did trade one short on the momentum short on the Dow, but you see, we did $200 today without me batting an eye, right? I was just completely, I started at 200, we're at 400, without me making any effort whatsoever. And I only did 2 or 3 trades. And it's just me and you guys sitting together for 25 minutes. So you can see how productive this can be when you're focused and when the markets are really cooperative, when you get a good, nice, clean trend. and you can size up on the trade. So that's sort of like, my best advice to you guys. Oh, we got data coming up. Let's see what the data gave us. Financial juice. Where's the new home sales? In a little bit less. Oh, we sold less. Okay, 8.9 against 9.9. Interesting. Yeah. So interesting. Wow. That's interesting. So that's a sign. We've been talking about the fact that we thought the consumer was slowing down, despite the fact that interest rates are declining. This may be a sign. I mean, there's a huge overhang of housing inventory in Texas, in Arizona. Who's from Texas? Anybody in the room from Texas? And actually, let's take a look at our survey here, because I'm just curious. So our survey, only 12% of you, just 10% of you today, have never traded, which is great. That's fine. I'm glad that all of you guys have traded before, so it's nice to know. So here's the question that I want to pose to everybody before we wrap up. Tell me in the poll. If you had a choice, a better way to say this would be, what would you prefer to trade? Your own account? Let me make this your own account? Prop test account. I'm actually curious, having sort of, come into this new world. I'm curious how everybody is thinking about trading these days. Let me know in the answer box what you guys are thinking about that particular issue, because I'm fascinated on that. All right, so here we are, double greens, right? But you see what's happening here is the slope is far greater. It's a 20 against a 7, not a buy for me. And I'm just simply sitting here nice and tight, right? Not a buy for me. But is this a sign that we're kind of stabilizing and maybe starting to have a trend up? If we do, the next one may be definitely lower than 20, higher than 57, and that will be a buy for me, and then I'll be able to find a good entry into the trade. So you see how everything kind of plays out in this game of mine, in terms of structures and numbers and everything else. Let me ask you, first of all, is this, having me explain this to you, is this relatively simple to understand? Because obviously it's obvious to me because I wrote it, but I know it can be confusing to other people. And I have literally no idea how to make it any simpler. That's the problem, because you have to rely on math and you have to have mathematical outputs. But I'm just curious if you have any suggestions, user interface suggestions to make it easier to understand. I'm happy to put those in there. But let me know. I'm curious. So Dow starting to pick up a little bit of steam, clearly starting to perform a little bit better, although still nothing. We're like basically just doing nothing here. But what I would be looking for is kind of the next green pattern couplet at a lower slope value and a high value. That would be the pause, the refreshes that I would want to be long. Meantime, Nasdaq can't break the 2000. The S&P is unfortunately is steepening its slope. So this would have been a good trade because it's a higher low, but the slope is much steeper. So we're going to pass that up. We're going to just be patient on the S&P as well, and let that play out. Somewhere in the Rockies, are you trying to clarify what the risk-reward ratios are? Yes. As a matter of fact, you know what? Let me put the risk-reward ratios into chat. Hang on. Let me see if my mouse pad works on this thing. For some reason, my mouse pad is real. Okay, you know what? We're going to use, screw this. Just use my touchpad. Okay, ES 1 TP 2 stop. NQ 5 TP 10 stop. YM 10 TP 20 stop. And GC, which is gold, 1 TP, or it's actually, 10 ticks. So it'd be 10, 20 on that. Okay. So those are points, but on the gold, I gave you ticks. I mean, it's 1 point, which is 10 ticks. Just a little bit, I may have confused some of you guys. Yeah. So again, very slow day today, right? Nothing much is moving. We have S&P is the only one up 16 basis points. The Dow is up nothing. I mean, they're not even like a 0.25% up, right? So it's all super, super quiet. We're just twiddling our thumbs and putzing around. You wanted to go up to 47.52? Okay. Maybe it will comply with your wishes. We'll see. Looks like it's right there. You're getting close on the YM. So I have a meeting, guys. I got to run. It's been a lot of fun. You got a good idea of the underlying fundamentals of this strategy. Tomorrow we'll trade it again. We'll see how well we did. We did pretty well today. Picked up a couple $100 for it with very no heat, like little heat, right? I didn't trade hard. I didn't have to suffer lots of retraces. I didn't get stopped out. Less trades, but a lot less stress too, which I like. And we'll see how the rest of the day goes. This has just been it's a sloppy day in the Northeast. It's kind of rainy. Nothing is going on. Everybody's twiddling their thumbs. It's also, getting close to August. So to me, it's starting to get clear that the markets are slowing down for the summertime. So, we'll take what we can get here and move on. But the principles are really great, I think, and that's the key thing. Anyways, I'll see you guys in BK if you want to join me. If you don't want to join us, but if you want to trade, definitely trade with Apex. Our buddies at Apex. Make sure you lock in all the savings. Let me give you that. I'm going to just give you all my come on, go away. And I'm going to give you all my links here, and I'll give you my free link to the not the free link, but the big discount link to the monthly. So you guys, if you want to try us on a monthly, you can try me on the monthly. I'll see you guys tomorrow. We're going to have a good time. Hopefully, I'll sound less like a frog, but I'm not counting on that. Thank you so much. Thank you, guys. Everybody have a great day. I'll see everybody later. Take care.